Good day, fellow investors. It's my moral responsibility to call it that we are now in the stock market AI bubble. So, 3 years ago, when there was the Cathy Wood craze, I analyzed these stocks, told you those will go down, watch the end of the video here, and that was correct. I told you Beyond Meat, Tattooed Chef, Zillow, Neo, very good butchers, Tesla, also Palantir. And I also told you 6 years ago about marijuana, comparing it to growing tomatoes in a glass house. I was also telling you that Bitcoin, it is also a bet. It can get to 100K, we're close to that, but it can also go to zero, and it is just speculation. I haven't been right on that yet, but here we are now. We have the AI stock market craze. Nvidia has exploded 10x over the less than 2 years. ASML holding is at all-time highs with a market cap of 414 billion. And this triggered me to do this video. Was looking at Bloomberg. Bank of America suggests that while reaching all-time highs now, ASML has another 35% upside based on booking revenues of 40 billion next year, and then serving all those chip makers that have to build the servers and data centers to run AI algorithms. This is normal when it comes to investing. The crazier the stock price, the more exuberant are the projections when it comes to what will happen. And that is also pushing the S&P 500 higher and higher. People are not thinking about price. The P/E ratio is at 27, way above the average historical. Nobody cares because, Sven, you're stupid, you're an idiot. AI will make so much money for everyone that it's going to be crazy, and Sven, you're going to miss out on the huge run because you don't understand things. In this video, I want to show you my opinion and why I'm happy to miss out on the AI craze. I'm happy I missed out on the growth stocks craze 3 years ago. I'm happy I missed out on marijuana stocks in the past, bio stocks in the early 2010s, internet stocks in 2000, etc., etc. There is this Brohill Asset Management that always sends a very nice newsletter, and they say the hell with herd mentality, and I'll take just some of you snips from their presentation. Subscribe if you want to read more about value investing to their presentation. I have no connection with them. I just like the attitude they have. So this is me, and well, contrarian, that's what I do, and that's why we are here and you are now watching. Now, profits from the changing AI world. How will AI change the world? Here it is. McKinsey, that should be a very reliable and reputable research company, says that AI could increase corporate profits by 4.4 trillion a year. That is 150% on current profits, according to new research. And how are they going to do it? You can pause this and read a little bit. Everywhere, tech companies will increase profits, generate value 2.6 to 4.4 trillion. And even, for instance, retail and consumer packaged goods companies could see an additional 400 billion to 660 billion in operating profits annually from the use of generative AI. Consumer packaged goods and retail. Now, where is the exuberance here? If you are a consumer packaged good producer and you have some kind of advantage, what do? You lower the price a little bit to gain more market share, to sell more of your products, right? When you lower the price, who is the winner? The customer. So if AI makes everyone so smart, which means the competition will increase hugely, which means the benefits will all go to the customer. Just an example from 25 years ago, how the internet changed the world. Did the internet change the world? Absolutely yes. You're now watching me doing this video. Thanks for watching, smash that like button. But you're doing that practically for free. It doesn't cost you anything. You pay your monthly flat fee and that's it. You're using internet. 25 years ago, the price of that would be enormous. And I think Gary Vee mentioned it somewhere that he looked to upload videos online 2004, and just to upload 5 videos, the weekly price was $50,000. Just to upload. Then for you to watch, it was even higher. And yes, at that prices, which are likely the current pricing situations that McKinsey has analyzed, at those prices, there could be a lot of profits. But what happens when there is so much investment in these things? Prices usually go down. And this is the story, the same story we had 25 years ago. Cisco, yes, it did grow, it did change the world, but investors from there didn't make much money. The Nasdaq Composite from the last bubble, investors there didn't make much money. These are meager returns till now. Yes, if you joined here, you feel a genius, but very often risk can be confused as intelligence in a bull market. Please don't confuse that. Why are the returns not great? Why didn't it just continue to go up? Because of competition. So research doesn't account for competition, for the lowering costs. I will use EI. How can I lower my costs? And this is then a wrong calculation based on just the upside, not thinking about the downside. Because if you just look at the internet transit prices, this is 99% down, and likely now we are still even lower. This AI, if it is so smart, the price of it will look something like this, and therefore competitive advantages, yes, for the customer. But there is always the herd mentality. AI will change the world, we have to invest in it. And going to Charles Mackay, in reading the history of nations, we find that like individuals, they have their whims and their peculiarities, their seasons of excitement and recklessness when they care not what they do. We find that whole communities suddenly fix their minds upon one object and go mad in its pursuit. That millions of people become simultaneously impressed with one delusion and run after it, till their attention is caught by some new folly more captivating than the first. Extraordinary Popular Delusions and the Madness of Crowds, Charles Mackay, written in 1841. And just to dig a little bit deeper on that herd mentality, everyone is in the S&P 500. Look at the momentum level compared to the 2000s dot-com bubble. The weight of momentum stocks is at all-time highs, thinking about Nvidia, compared to the Nifty 50 of the 1960s, 70s, and 1929. The weight of the largest companies is extremely high, yet history is not on their side. Because companies, yes, grow sales, but if you look at consecutive years, sooner or later that growth subdues because of the competition that I already mentioned. And EBIT margins continue simply to go lower because everyone is after those companies. Big is anything but beautiful. 1957, 2023, top 10 stocks versus the S&P 500. Relative returns are negative. This is the performance of the top 10 versus the other equally weighted. Look at this, negative versus positive. And now we have also the market cap of the largest stock relative to the 75 percentile. Compare it to the years here and you will know the long-term returns. We have now a concentration in tech. Whenever it was like that, the returns haven't been good. And I'll just give you a counterbalance. Buffett's cash pile rose to 189 billion amid scarce deals. So you can call me whatever you want, idiot, whatever, but I'm calling it, I'm saying it, it is a bubble now. I hope it lasts as long as it can for you, but I'm just going to keep doing my compounding irrespective of bubbles succeeding, of not succeeding. That's value investing. And the thing is that whenever I call for these bubbles, I am called an idiot. The thing is that those calling me an idiot constantly change. So be careful on that. Thanks for watching, and if you're a value investor, I'll see you in the next video.